afternoon, everyone, and welcome to Stock Market Today. It's Ali Corum and Ken Shreve here with a breakdown of the action in today's session, where we saw the NASDAQ take quite a bit of a hit, but in large part due to a huge plunge in Netflix in reaction to its earnings report. And we have more coming in hot. Tesla after the close. We might get a quick reaction of that by the show's end. But Ken, a lot to go over today.
Yeah, I'm actually seeing Tesla up about 3.5% in after-hours trading. Haven't seen the earnings yet, but we'll see if those gains hold. But yeah, Ali, nice day of outperformance for the Dow Jones today. IBM, a great gainer on earnings. But instead of talking about IBM, we'll talk about Procter Gamble, P&G, which surged on earnings and cleared a buy point today. We'll also take a look at CVS, the pharmacy operator. Earnings not due for a couple of weeks, but it's setting up in a nice looking flat base here. And finally, automatic data processing, an industry group here of Paychex, which reported earnings recently. ADP is setting up in a nice cup with handle base as well.
All right, fantastic. We'll take a look at all of that. But first, let's analyze current market conditions by taking a look at the major indexes. So the NASDAQ today down about 1.2%. The S&P roughly flat, slightly negative on the day. And the Dow in positive territory, closing up 0.7%. We also had small caps up by some 0.5% today. And Ken, you pointed out the strength in blue chips. We'll go there, but first, let's take a look at the NASDAQ and this resistance that we're seeing at the 50-day line.
Yeah, I mean, this is still, an index that has got a lot of work to do before we see some improving price action here. It was a nice, solid up session yesterday, but then we get this really horrendous earnings report from Netflix. It's a big reason why the index was down so much today. I think I mentioned that breadth on the NASDAQ was pretty much split 50-50 with advancing stocks pretty much equal with decliners. So on a day where you see a decline of more than 1% for the NASDAQ, you'd expect breadth to be pretty bad, but most of the damage in the NASDAQ was due to the Netflix sell-off.
That's right. Okay, well, let's take a look also at the S&P 500 as well, because it's above its 50-day line, but hitting its head for now at the 200-day.
Yeah, so we're really waiting for the S&P 500 to break out of its downtrend here. It's going to need to get back above its 50-day moving average, and even if it, its 200-day moving average, and even if it does that, it still has that recent high to contend with as well. So it's not even a breakout over a trend line yet. So this is still a challenged index as well. We do have 5 distribution days on the S&P 500 since March 31st, I believe. So, when they start to cluster like that, it can presage more weakness. But right now the S&P is hanging in there. I'd just like to see it get back above that 200-day line.
And we have the Dow, which is above its 50-day and 200-day lines. And we have a break of a downtrend here for the Dow from its highs going back to the beginning of the year here. Ken, do you think that this is significant, or could we not treat it in quite the same way as we do as the NASDAQ and S&P 500 with so many more stocks in those indexes?
Well, I mean, it's just indicative of what the market is favoring right now. You've just still got still have these high multiple tech stocks that still look very vulnerable, and you've got money kind of flowing into safe haven names, many of which pay dividends. They're large, liquid, but it's just a good safe haven in the market. So not surprising to see the consumer staple stocks. We talked about the XLP ETF on IBD Live, the consumer staple stocks, which tend to pay pretty good dividends. You can see that ETF has really taken off. So, and you do have some dividend payers in the Dow, including IBM, which I said, which had nice earnings, and Procter and Gamble as well, which we'll talk about in a second.
Yes, exactly. And first, before we do though, so you talked about a distribution days clustering on the one hand, which is a weak signal of weakness, but then we have the bulls bears crossover with more bears than bulls, and perhaps that potentially indicating some sort of short-term bottom. So how do we sort of digest all of these different indicators?
Yeah, well, like you said, you don't have the investors' intelligence survey came out today and had another decline in bullish sentiment, and you have bearish sentiment on the rise. But this is a contrarian indicator because it's a survey of newsletter writers, many newsletter writers, and the crowd is often wrong when they're calling market tops and bottoms. So when you see bearish or bullish sentiment fall and fall and fall, and like I said, bullish sentiment was at 39% or so a few weeks ago, and now it's down to 32%. So the number of bulls are shrinking, but that could be a good sign because it's a contrarian indicator. So we've seen a lot of bearishness at market bottoms in the past, and we've seen a lot of bullishness at market tops in the past.
Mm-hmm. So something else to consider there, even though we're not seeing a whole lot of movement in the VIX, so maybe there's still a little complacency in this market, but it's the middle of earnings season, so that is sure to shape the action that we are seeing out there. And so you mentioned Procter Gamble, so let's go there to this Dow stock. Ken, P&G up 2.6% on the day and above average volume, breaking out of a cup with handle base on its earnings report.
Yeah, and you can see the blue shaded area in the MarketSmith chart there. So it's still in that 5% buy zone. Volume, not huge, but it was a little bit above average and higher than Tuesday. So anytime a stock breaks out, crosses a buy point, you'd like to see it, close near its high. And Procter and Gamble did that. So this was a pretty good looking breakout from one of the top consumer staple stocks out there.
Yes, and taking a look at the weekly chart, that relative strength line getting close to its prior highs, and we have a yield of about 2.2%. So as you mentioned, this is considered to be a safer area to be in right now.
Yeah, absolutely. So for people looking to maybe have been raising cash and have moved out of some of these high PE growth stocks, money is clearly flowing into a lot of these consumer staple stocks, and it doesn't look like you're buying an extended stock right now. It's still within that 5% buy zone and looks pretty good. Also, real quick, just wanted to give a shout out to IBM. We could look at a daily chart for IBM in the Dow, and this was another stock that it gapped up very powerfully on earnings and held gains throughout the day, finished near its high. This was another breakout over a trend line. Very heavy volume here. So when a stock gaps up, a breakaway or just gaps up on strong earnings, you want to see it hold near its high, and IBM did that. Now we'd expect it to digest these gains. It could follow through and break out over that 140 level, or it could just move sideways here and bide some time and maybe give a new entry point.
We'll have to see, but perhaps a potential character change in the works. Thanks for mentioning that, Ken. Okay, now let's turn our attention to CVS, getting back above its 50-day line as it aims to carve the right side of a base here, up 2.7% today. And even though it has this flat base, it's working on a potential trend line also in the works that could offer investors a little bit of an earlier entry.
Yeah, I think so. I think if people might have nibbled today, you can see how volume or just price action really quieted down over the past 3 or 4 sessions, and then boom, it just takes off today. Volume was below average, but it was considerably higher than what we saw on Tuesday. The daily chart here really doesn't have the look of a good flat base, but if you go to the weekly chart, it kind of smooths it out a little bit. A pullback of about 11% from the high to the low. And so CVS is in a nice setup here, and wouldn't be surprised to hear a good earnings report. I don't think they report next week, but the following week. So a good one for the watch list. A lot of optimism about this company's recent acquisition of Aetna and all the synergies that could emerge there. So CVS, as we've been talking about, it's got a lot of new going on that could be a nice driver of earnings and sales going forward.
Yep, one for the watch list indeed. It's got that low PE and a yield of about 2%. So we'll have to see if earnings can be that next catalyst for the stock. And we talked about Paychex, Payx, a swing trader name on IBD Live this morning, but let's take a look at group peer ADP. It's also setting up in a cup with handle, and with this bounce off of the 21-day line, potentially an early entry that investors could have taken advantage of today.
Yeah, we might take a look at this one in the earnings preview column as a possible option trade, only because Paychex had a really nice report not that long ago. So with Paychex saying good things, I wouldn't be surprised to hear ADP talking a similarly bullish story. So it's just a pretty good cup with handle base. The pullback down to I can't down to around the 200 level or so. Might look a little steep, but it has rallied back nicely. Good handle forming here. The handle is where the last remaining sellers get shaken out of a stock, and it's setting up for a breakout try. And we're going to hear from them 1 week from today. So next Wednesday, earnings from ADP.
All right. Well, thank you so much, Ken. And now let's check in on Tesla as we wrap here. It looks like in the early going, shares up about 4.5%, a little bit more than that, perhaps. Percentage-wise in after-hours trading, the revenue up 81% from last year. So that would be another quarter, a second quarter in a row of acceleration on top-line growth, Ken.
Yeah, stock has been under a little pressure. Did not have a good day today ahead of the results, but nice to see it back above the 1,000 level. It's been a long time holding of our on leaderboard. It's a fairly small position. We've taken some profits along the way, and but we're still holding a little small position here. And hopefully tomorrow we'll get a nice update for the market and maybe a nice recovery for Tesla. But the numbers on the surface look pretty good.
All right. Yeah. Continue to hover around that 1,000 level and trying to make up the loss from today. So we'll have to see how this reaction, if it can sustain itself into tomorrow's regular session, because that isn't always the case, but we'll have to see. And for the full breakdown on Tesla's earnings and what it means for investors, make sure you go to investors.com. Our tech team has got a write-up in the works, if not already out, on this. So please read that for more information.
And our man Ed Carson hosting IBD Live on tomorrow morning on Thursday. I'm sure he'll be providing plenty of color on Tesla results. I don't know that there's anyone that knows more about the EV market than Mr. Carson. So we'll be sure to talk about Tesla tomorrow.
Exactly. And so it looks like it was a beat on both the top and bottom lines for Tesla. All right, everyone. Thanks so much for tuning in. We'll be back with more tomorrow morning on IBD Live, as Ken said. So be sure you tune in for the first hour and a half of trade, where our team's going to break down the market action and notable stocks in real time. Investors.com/IBD Live for all the details. We'll see you there, and we'll see you right back here tomorrow after the close.